Hello traders, Gary Wagner for Trending Markets, approximately 11:30 in Honolulu, 4:30 in New York, November the 9th, Monday, 2015. And we do have some downside action in the U.S. equities markets, trading off by about 1 full percentage point in the Dow Jones Industrial Average, 17,730, the low 17,667. Low, very interesting, especially in the S&P. When we look at that, we'll take a look at the 200-day moving average and compare that to today's low. NASDAQ also trading lower, this being the E-mini NASDAQ 100 off about 1.08%, 51 points lower. And finally, when we look at our Standard & Poor's, you've got that trading at 2078.58. And of course, we'll look at the E-mini, which is the contract that we're trading down 1%, 21 points at 2072.75. First of all, if you recall, on 10/28, that was a Wednesday, we actually went long and got long the S&P E-mini at roughly 2068. On Thursday of last week, we issued a recommendation to cover our contracts, and we got out at 2093 for about a 25-point gain, a nice profit on the trade. And now we have the E-minis trading much lower and off of that point. We talked about the fact on Friday that I'm still bullish overall, and we'll look for a place to reposition ourselves from the long side. We are in holding mode right now, but one thing I find very, very interesting is that if we look at the low of the day, and we're looking at basically a daily chart, but if we look at the low of the day right here, and then we look at our 200-day moving average, you can see that the 200-day moving average has absolutely been a supportive factor as far as the markets are concerned. This dotted line here is our 50-day moving average. And of course, once we cross there, you can see it came back down, but it really found support, traded up. We had a slight downtick, then it traded through this point. But since that point, which is really, call it mid-October or towards the end of October, we have traded absolutely above the 200-day moving average. If the market is able to hold above the 200-day moving average, that tells us that we will probably be positioning ourselves much quicker than anticipated. But we want to really make sure, once we have seen this market under pressure over the last couple of trading days, we want to make sure that this particular area holds. If we did take a stab, this is where we would want our stop, obviously. But the real question that we've got to ask ourselves is that as this market has moved up, we've not really seen any kind of a sizable correction. End of October here, low at 1860. As we've said, the market moved up almost consistently. We had this one red day here, but we won't really count it. Then the market breaks above this 50-day moving average and trades well above it, but then comes down, and you absolutely can see how that was a supportive action. Market moves up, you have this one small correction, but once it trades over the 200-day moving average, aside for this little glitch right in here where it came into that range, market is genuinely traded above that. So the real question is, will we see this market form a base trade above that? Because if that's the case, we've got to start looking at our record tops as the area in which we think this market could genuinely move to. And that would be a range between 21.25 and about 21.38. But that would be the range to then go challenge these historical highs that were reached in the market prior to this August meltdown. So we want to take a serious look at the E-mini this week as a potential trade. But as I said, I'm reluctant to put the trade on today. We do have a nice down day. We've had these couple of dojis that came in, which are truly consolidating. So we could have traders some sort of a rounded top right in here. And that's what I'm trying to see, because the one characteristic that we did find as this market hit the top were these rounded tops. You can see them spread throughout, in which you have a series of days in which you get smaller incremental moves with higher highs till you get a series of dojis coming in, and then the market would sell off a little bit and trade below the range that it was in, find support somewhere, and then repeat repeat. In other words, what we really saw at that point was this market trading sideways in a congestion pattern, in which every time it hit those record tops, we tended to see it trade off a little bit and trade to these lows. So we absolutely, as far as I'm concerned, have a rounded top coming in again. And so the question is, where will this market go? Because at all times, realize that when this market was trading dramatically higher, it was above a couple of things. It was absolutely above our 200-day, and it was absolutely above our 50-day. But as you remember, look what happens when these two cross. The 50 goes under the 200, and that absolutely corresponded with our August meltdown. So we'll have to see how this plays out over the next couple of days and weeks ahead as we get into the final two trading months of the year. But historically speaking, every time we had a really strong performance in October, 78% of the time we had follow-through rallies and higher pricing in November and December. Will history repeat itself? Will we get these November and December rallies that seem to come after strong October moves? That's something I'm excited to find out about, because I think we'll have some real trading opportunities in trending markets. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another trending market.